Hello, hello, hello. I hope you guys can hear me loud and clear. Oh, Murph is back. Murph is back. How are you feeling, Murph? I hope you're doing well. I hope you're doing all right. Sorry, my camera's off today. My room is in a mess. Loads of things happening. So just, it's just in a mess. And yeah, not a good day to keep my camera on. Let's just say that. How is everyone? Hi, Po. Hi, Gio. Hi, Eliada. Hello, Daniel. Hi, Nick. How is everyone doing? So, shit price action. Shit price action during the London session. Got a small winner. So, firstly, got a small loser of minus 0.5 hour, then got a smallish winner. Like it was a 2-hour winner, but I mean, it was a counter trend trade. Honestly, could have been better. That's how I say it. And yeah, but yeah, right now, what I'm looking at is, to be honest, totally unclear. Price is basically in a very weird situation. So let's go here quickly. I'll show you the winner that I took as well. So let me just get rid of everything first. I'll show you what the trades I took before jumping in anywhere. So don't worry. So this fair value gap is right now acting as a big barrier for price. Now that is bearish, right? You're getting rejected from the fair value gap. But what is turning the price a little bullish is the way it is consolidating. Look at the consolidation happen in this rounded bottom structure. Now, whenever you see rounded bottoms, that basically should give you some sort of, it should scare you a little. Why? Because number one, the rounded bottom is being formed after sweep of liquidity. Like this liquidity is gone, swept, went up, came down, rounded bottom being formed. So that's one thing. Number two is the Adam and Eve bottom. So this is the first bottom. That's your V-shaped recovery, Adam. And then Eve. Adam and Eve bottoms are very good reversal patterns, right? High success rate. So I just want to keep an eye. Because obviously if I'm looking at daily, I'm basically looking at in the coming month where price might go. And I just want to be sure that even if I get it wrong today, I want to be correct for the coming month. I want to plan in advance for the coming month and see what happens. We don't need your masked face. Your humor is more than enough. Thank you so much. I think it's more for people who don't even know who the fuck this guy is. I mean, I sometimes feel it is better to do it like this. I think it is more clearer for you guys to hear as well. And I can breathe. I can keep it longer, keep the stream running a bit longer. But I don't know whether YouTube likes me not showing my face or YouTube doesn't like me not showing my face. To be honest, I think YouTube doesn't like me at all. The traction I'm getting is shit. So, yeah, but I don't give a shit about that. So yeah, I mean, daily, if we are to perform this sort of reversal, I love that. I like that. And yeah, I mean, this fair value gap is what's standing between us and that sort of a reversal to the upside. But until this fair value gap is inverted, we have to be bearish. We have to think bearish, and we have to think the price is going to go down. Now let's quickly look at the 4-hourly. 4-hourly now. Okay, what the fuck is that? So 4-hourly, the price has gotten rejected from this little BPR, okay? BPR on the 4-hourly. It's trading right in the decision making area. If price can push through this BPR to the upside, that is in the next 30 minutes, we can push through this. At 3 a.m., I would say there is a very good chance we will head higher, sweep all these highs, and maybe even head towards this fair value gap at 25,261. So if you do that, then you're looking for higher prices around 25,250, 260. If you start getting rejected at open and start going lower, equal lows at 24,808 is in picture. So both the sides are basically clear in regards of where price might want to go towards. So to the upside, you'll be looking at this highs, right? Or you can even look at these highs. I know they are swept, but like, it's up to you how you see it. So these highs will be a buy side liquidity for me. Now somebody will say, well, this is not really buy side liquidity, this should be buy side liquidity. Well, if you'll go down to lower time frames, this will be a nice buy side liquidity for you. And over here, the equal lows that you are seeing will be attracting price towards it. So basically, you have targets on both sides. You just need to decide which side of the market you are going to fall towards, which side of the market you want to trade towards. So yeah, my 2 cents at this point of time, where price is currently, is towards the downside. If we start inverting this fair value gap, breaking $25,000 mark, I would be happy to take a long and take it to higher prices. So that will be my 2 cents. Look at the 90-minute. Nice back-to-back fair value gap on the bullish side, nice back-to-back fair value gap on the bearish side. Which one does market respect more? If you have that question in mind, the answer is pretty clear. If you are able to, if you can basically go down and do a change in state of delivery on these, then it's the downside one. If you go up and do a change in state of delivery on these, then you're going up. Very simple. It's in a no man's land. If you will basically measure the whole leg, you are literally trading at 50%. So taking a trade right now and thinking that the market will follow what you want it to do will be stupidity. It is best to just wait and watch and let market come to you today. See, the market is in a consolidation phase. From last Friday, 12th of Feb onwards, we are just consolidating in this area. Before that, we came down for a day, but we were consolidating. So the market overall has been in this nice consolidation, if you will see, starting from the 4th of Feb. We have not done much. We have not moved much. So some move is going to come pretty soon. It's more about if you can be smart enough to just wait for it to come. If you are not, if you are impatient and if you try to jump into trades, I think we'll be wiped out. So yeah, that's my 2 cents. Now quickly going down to 1 hourly time frame as well. It's a nice little Eve and Adam formation happening, double bottom. Let's see if we can break above this. Again, see the same thing. Break above 25,000 with power and you are seeing much higher prices. Break below and you're seeing much. It's very, very clear right now. The market is like, just wait for me to tell you where I want to go and then it will be fine. Right? So let's just keep our eyes on it. Let's just make sure that we know what's happening. Now, intraday levels. Let's quickly look at the intraday levels. Asia low, London Q1 low has created a very, very nice equal lows at the bottom. There's a nice little sweep, very small sweep at the bottom, but as of now, I would say they are equal lows and the market will be attracted towards them. Now, on the other hand, on the 15-minute time frame, you have back-to-back fair value gaps over here, the target of which is previous day high and previous week high, and 400% will be where our target was for this liquidity. So which one's going to play out? Again, let's see. Can't say that this is not achievable or this is not achievable, but also we can't say that this is not good liquidity resting below. So keeping your eyes open, making sure that you know what the market wants to do. But if you look at the range that was created, you are basically sitting inside a bullish range. You went into the OTE, you have retested the 50%, and now you're trying to push higher. So if you are asking where I will put my money, I think my money will go towards bullish price action, towards these highs and these. What sort of entry will I be looking at? Let's go down to 1 minute to think about it. The entry that I would love to see, and I hope it happens as well, is that we basically take liquidity from these lows somewhere around here, instead of the way what it is doing right now, just keeps pushing. If it does that, then it's very difficult for me to enter. But I would love for it to go down to take some liquidity and then basically push higher. If that happens, great. If that does not happen, do I see anything else? Well, it might rush through, but let's see. Okay, I do see something else. I would wait for this 2-minute closure and then another 2-minute closure. If I get a back-to-back fair value gap, I might straight away open a trade. So let's say I get a fair value gap right over here somewhere, right? Then I'll straight away open a trade and take it to Asia high. So that would be my trading sense. That would be my plan. This fair value gap is crucial right over here. Keep an eye on this. This could reject price to go back and then jump out of it. But yeah, that's my analysis. Bearish side, I've told you what I think. Bearish will be inverting this fair value gap. I will take a short, take it down to London Q1 low. Bullish, if we leave a back-to-back fair value gap, I'll take a long and I'll take it from there. But yeah, you need to just wait and watch. Let the market come to you instead of you trying to go towards the market. Now, questions. Anyone got any questions? I get like 15 people, then 20, 17 people, then 20 people, then 15 people. I think people don't like my voice without the mask. Whatever it is, I don't give a shit. Yes, tell me guys. Any questions, anything from your side, anything you want to ask? So there's no back-to-back fair value gap for sure. This is not good. So we can't really play this. We can play this, but how do you play this? So if you are to, I might take a small long at the close of this candle. So put your stops here and target this 450% maybe. Could work out. If you put your stops here, this is also not bad. And if you start getting into that position, you can target this area. Okay, I will take a long position at the close of this candle, and I will basically just go half risk, 0.5 hour to see. Okay, how much is the stop loss right now? 28.30. So okay, 4 contracts. And I'm in. So I've taken a half risk position. Some entry is here. I'll target the higher end, but obviously I'll take TPs in this area if you get there. It's a risky trade. The reason I'm taking it is because we have this back-to-back fair value gaps, and we have done a change in state of delivery on this candle as well after the retest. So if the market is going to be bullish, it might push very quickly from here. And yeah, pre-market trade, but only half risk. I'm not going full risk. So even if I lose, that will be minus 0.5 hour. So I'm in a trade now. See, if they're 5 minutes back, I was like, I'm not going to take a pre-market, and then I taken a pre-market because I felt the market might move quickly. So let's give it some time. Let it play out and see what happens. If I get a good push, I'll just straight away move my stops to break even and try to reduce my risk completely. And if I get stopped out, it's minus 0.5 hour, so I'm not so concerned. So yeah, measured moves. So nothing yet, not moving my stops yet. I'll take a TP on 400% if we reach there ever. So that would be my TP1. That's my TP1. I'm basically moving my stops to break even now. So stops here, fucking move stops first and before later, right? So stops to break even. And yeah, I'll let it go. And I'll move my TP to previous week high, final TP, and I'll just let it play. If it stops me out, that's fine. If it just goes, that's fine as well. Don't want to be too greedy with the market, but yeah, let's see. It swept the London high, so if it wants to reverse, it's going to reverse from here. So you have to be open, right? You have to be open to where the market might want to go. So if it goes higher, lovely. If it doesn't, then I've taken a TP and I've moved my stops higher. So yeah, protected on both sides. I'm going to move my stops just to this candle. So that will be 24,980. So moving my stops into profit so that any fees and everything else is also covered. Yeah, stops higher to 24,980, and I'll let it play now. That will be not yet stopped out. So nice little win. Took my first TP around here, so around 0.6 hour winner overall. So let's go start of the day with a winner, and now we just wait. I mean, if you were smart, you would have taken the whole position off at 400%, but I just wanted to see whether it has the legs to push higher. So I love this candle right now, man. I want to see how we react here. Oh, lovely reaction. Okay. If we close this candle above, I'll take another long. To be honest, I will take another long at the close of this candle. This candle's close. And my stops will be under this low, New York AM low, and I'll target previous day high again. I'm going to enter now. Okay, in. My entry is somewhere around here. and I'm targeting previous day high. Stops are underneath this low. So what I want to see now is that this candle pushes higher. If it can't push higher, then this will be stopped out. This one is a full risk trade. So if I lose this one, basically I'll lose 0.4 hour for the day, like sorry, for the session, because I made 0.6 hour in the last trade. If I lose this one, that will be, yeah, kind of taking me down for the session. Nice imbalances, but can we push through these imbalances? I like the imbalance that is being formed, but can we push? Do we have the legs to push? Hello, Gomez. Yeah. No, we need another push. So what you want to see here is, can we push above this? If we can't, then most likely it will be a stop out. So which is fine. Where if the market stops you out. Because I'm liking the way we are forming imbalances, but I'm not liking the way the candles are being a little bit jittery every time they form imbalance. They are basically being bearish instead of being bullish the way they should be when an imbalance is formed. So just going to wait and see what happens here before I move my stops if I get what I want to see. Good afternoon. Any questions from anyone, please feel free to ask. This is an important candle. I want to see how this candle closes. If this is a bullish closure, I'll most likely move my stops up and reduce my risk. Okay, bullish close, but not the way I wanted. I'll not move it yet. What's happening on the 1 minute? Not bad. So we are still trying to trade above the London high, so that's a good thing. Until we are above London high, that's fine. If we come below London high and we start displacing lower, I'll take a short position to the other side. Oh, I am a scalp trader, yes. I trade every, like, scalp and intraday. Especially when I don't know what the market is doing. Like if I don't have a gist of the market, then I'll most likely scalp and intraday, like not go intraday, I'll go scalp. But when I have a gist of the market, then I'll go in longer trades and let the market run. So not looking good. This will be a stop out. So let it run. I'll let it do its thing. Oh, not bad. Good reaction. Let's see how you close, brother. That's a good reaction. At the close of this candle, if we are bullish and we close above this fair value gap, I'll most likely move my stops to this low. But that depends on how we close this candle or the next candle. I mean, we need a closure above this fair value gap, in simple words, to move our stops higher. I mean, that's no farm, right? No farm. I basically scalp, I intraday. It all depends on if I have a context of the market. When the market is really consolidating and it's not giving me a direction, I would rather scalp. And when the market does give me a direction and a confirmation that, okay, this is where I want to go, then I'll trade intraday. I'm not yet stopped. I'm stopped now. So minus 0.4 hour for the session. Let's just write it down here. Minus 0.4 hour for the session. That's fine. And now we need to wait. First 5 minutes are done. Scalping takes a little bit of experience, plus I would say a little bit of balls as well. Good reaction. Just going to wait a little bit longer. Just give it some time. So no trade now. Just going to wait. Nothing yet. No trade yet. No, nothing yet. I'm going to take another long here. Stops below the low. Okay, I'm in. This will be a full risk trade as well. My entry is 24,987. That's good. Again, previous day high target. I'll not move my stops to break even yet. I'm just waiting. Just waiting for another candle closure, a bullish candle closure. Otherwise, I can't move my stops. This is a full risk trade, by the way. So if I lose this, this will be my final trade of the day. If I get a good reaction of this fair value gap, then I will be happy to move my stops to break even. So a good reaction would mean that I can close a candle or do a change in state of delivery on this candle. That will be my indication to go break even. Not yet. I think no. Just let it run. Let's see what it wants to do. Okay, I'll go break even on this trade. Even if it goes down now, it stops me out. I don't care. So I am break even on this. I've not taken a TP. I've just gone break even. I'll tell you why I went break even. And even if it stops out, there's no loss, no winner. So that's fine. Yep, that's break even stop. That's fine. This was a quick one because, okay, let's just run through this trade and then we'll talk about if we take any other trade. Today, why I'm doing scalping is because it's a clear, as I said, we're in the middle of the range. If we can catch a momentum, we can catch it pretty quickly. So we took the first 5 minutes liquidity right over here, right? This was the first 5-minute low. We took the liquidity and then we swept the liquidity that was taken again, left a fair value gap. We went long early. We went long right somewhere around here, right? Because we took the liquidity and there was a bullish closure. And I was like, okay, bullish closure. And then there was a volume imbalance. If you will see, this candle opened above this candle's low high, right? So this candle closed over here and the other candle, let me get rid of this thing. It's easier to explain. Yeah, so this candle closed lower, but this candle closed higher, right? Once that happened, that gave me an indication, okay, we are showing a volume imbalance. And I entered over here, somewhere around here. Then you got a follow through. And once you had a follow through, you came back inside and then you gave a change in state of delivery. Now, if the market is truly bullish, it would basically keep running here. It will not come down. And that's why we went break even. Okay, I don't want you to come down. If you come down, that means you're no more bullish and you're going turning around. So that's why. But yeah, looks like it didn't want to go higher. I'm still sitting at around minus 0.4 hour, which is fine. Okay, so quick rush. Oh, can take this trade, but it's a massive stop loss now. Will we even get to R? Well, we can. Let's just wait for this candle closure, because from there we can get a measure. So if we wait for this candle's closure, we'll get a measure of where the market might want to go. But there's a lot of liquidity that it has taken, so it will be fun to see how it reacts. I would love to see it go back inside quickly and then come down instead of just rushing down. Yeah, I don't think I'll take this trade because it's already like I'll not get 2R until London Q1 low. So I want a 2R trade. So no matter what, a 2R needs to be there, and the stop loss is going to be very, very wide. If I'll see this on the 15-second, yeah, as I said, if you can go back a little bit and then give me an entry, yes. Can we? Nah. So when you're scalping, also remember one thing. You want to catch the move early. You don't want to jump into an overextended leg. So if you are scalping, right, you don't want to trade this leg down. Like you want to trade it, but you want to trade it down from here. You don't want to basically force a trade right over here. Then right now, what you want to wait for is can this market, because you have a target, you have this target, can this market go back inside this fair value gap, give me some sort of a structural change on the 15-second, and I can enter that trade and use this as my stop loss. That's what you want to wait for, because until that happens, there's no trade. So yeah, you're waiting for like some sort of liquidity hunt to the upside, or some sort of price going back into the OTE of some leg, maybe this leg or some other leg, just pushing back into the OTE somewhere around here, and then giving you a change in state. That could be a trade that you can take. Yeah, you anticipate. Yes, you're anticipating what the market wants to do, and then you're trying to catch that move. In that case, you just try to make sure your risk is not too much, and you are always trading with a stop loss, because the market on lower time frames can move very quickly, and since the stops are lower, the position size is very massive. If the position size is massive, it can wipe you out very quickly as well. So yeah, you just have to be smart. You just have to know what you are doing. Otherwise, scalp. That's why, well, like all my mentees, I always say, don't go down to 15 seconds, because it can basically become like a graveyard for retail traders, because they don't know what they're doing, and they'll just, they'll trade, and their position size might not be correct, and they'll be totally messed up by the end of the session. So I don't think it wants to push higher. Oh, you want to prove me wrong? Go on, push it. Okay, good. Okay, if you are doing this, so somewhere around here, you can target a 2-hour trade. Yep, not bad. Just waiting for something to happen. Not yet, because we can still target this area, I feel. I'm just giving it some time to play out. Okay, I'm going to enter a short position now. I'm in. Oh, fuck, good entry. I literally got the peak of this, and my stops will be above this, okay? And I'm targeting London Q1 low. Let's see whether it goes there or not. If this is a stop out, then that will be the last trade for me for the session, and then we can talk a little bit about education stuff. Because this will be a full risk, and I'll basically be down 1.4 hour. That will bring me to a break-even day after quite a few winning days. And yeah, I don't want to overtrade it. This is already my 4th trade of the session, so this will be the last one. Again, another thing about scalping, you need to know when to stop. Because if you don't stop, yeah, you can have a fucking shit day. I have had some where I kept trading, and I've literally blown accounts because I was like, fuck, oh, I'll get it right. But you just need to know that, okay, that's fine. I tried a few times. It did not click. I'm just gonna stand up. So yeah, just my 2 cents to you guys. If you really want to go into the scalping side of things, just remember that you should know when to stand up. It's like the blackjack table, you should know when you have won enough, or you have lost enough to say, I'm done for the day. So yeah, not really liking the way we are reacting to these lows. We have taken these equal lows, but we are reacting bullishly every time we go below it. So most likely we'll be having a stop out on this, but that's fine. We'll see the other side of the market, and most likely we'll cover some educational content then, if it's a losing day. But as of now, not move my stops yet. I'll keep my stops where they are, and let it do its thing. And not yet stopped. Top step is trading above it. Like Top step is trading above the price that CME is trading a little bit. I don't know why. Even that Friday it happened with us, right? When I took a trade and it stopped me out straight away on Top step, but the price never went there on CME. So I'm not going to move my stops, obviously, even though this is like a lower high, but it's a lower high by quite 1 tick. So I'm not going to move my stops there, but it will stop us out. It just looks stronger right now. It might sweep these highs and come down, but I'll not take those trades. I'll be done for the day. Once I'm stopped on this, I'm done for the day. I'm stopped. I'm done. So minus 1.4 hour session, 1.4, right? Yeah, minus 1.4 hour session. Quick one. If I get something, I'll see. Well, depends on how you see it. I basically like no farm. I don't. If I'm winning, I'll want to keep winning, and if it's similar to a casino, right? If you are winning in a casino, will you stand up? You should know when to stand up. But if you are having good hands, if you're getting good hands, will you want to stop at that time, or would you want to wait to see when you get a loser and then stop? I mean, for me, my theory is simple. If I'm having a good streak, I want to keep my streak extended. And it's just, maybe the price we just wanted to sweep this and it might go lower. But for me, now is the point where I will say I will not take a trade anymore. Like, I've had very, very good overall, what's my month been like? Let's see. I mean, I've had a very good month overall, like around 43.8 hour, and I don't want to, fuck it up. Like today, this session is around minus 1.4 hour. Overall, I'm still up for the day. So just chill, relax, or maybe not up for the day. I don't know. I think I'm little down for the day, $200-$300 down for the day. I don't know. I'll check later. But this, even if it is, I'm down for the day, it's a small losing day, right? So since I did not know where the market wants to head towards, I was scalping. And if I'm scalping, I just need to be sure that, okay, these are the maximum number of losers I'm going to take. And once I have the maximum number of losers, I'm going to stand up. But if I was winning, I would say I'll take another one. If I get the right gist, I'll take another one. Because until I'm winning, I want to extend my hand. The moment I would have lost, I would have stood up. So for me, it's not about one winner a day. I don't see the market like that, oh, you need to have one winner a day and stand up. Well, you are here in the market to make money. And if you're making money, if you're able to predict the market, if your thesis is working, if your bias is working, if your analysis is working, why the fuck do you want to stand up, man? You want to be there. You want to trade the bias. Let's say you scalp from here to here, and the bias is this London Q1 low. Market pushes high into this OTE, right? Let's say, so market pushes higher into this 50% and gets rejected from there. I would take that trade again, take it to London Q1 low, because my bias is still London Q1 low, which is not achieved. So I'll not stand up. For me, it's very simple. I'm standing up right now. Right now, I'm saying I'm done for the days because I've had the like minus 1.4 hour on 15 seconds. Yeah, I think I'm done. Maybe one more trade, but that would be higher time frame. Like that trade would most likely come if we go back inside this fair value gap and get rejected. So yeah. But overall, the market is just right now not confirming anything. All right. So like now, if you get a rejection, you want to take a short trade again. But again, it's not necessary you will get a rejection. You might just continue higher. So what would you do in that case? I'm trying to see if I get something. But I will not. I'll just put a paper trade here. If I get anything, will not trade it. So if, let's say, you basically get some sort of rejection over here, inversion of fair value gaps, then you can take a trade, use the highs or whatever as a stop loss, and then again do the same thing, is that target that London Q1 low. So you wait for an inversion to happen and then use the highs or this high as your as your stop loss, and again wait for the same thing. So that would be your paper trade that would occur if you play that sort of market. But if the market doesn't give you that, and if the market starts pumping, then you're turning bullish, and you'll be like, okay, if I'm turning bullish, how do I trade this? So if you're turning bullish and you want to trade the same thing, you'll be like, okay, there is a massive fair value gap which is sitting right over here. Can you invert this fair value gap? Can the market invert this fair value gap? If so, I might want a retest of the BPR and take a trade from there. So multiple different ways of trading, multiple different ways in which you can manipulate the market, use the market in your favor. It's all about what you are seeing and how you want to trade it more than anything else. Like we've had, like Friday, we had that candle, right? I took the long and the candle went zoop, and everybody would be like, what the fuck just happened, right? That's what scalping is all about. You're anticipating where the market wants to move towards, Like the way market swept this low, I was like, I'm going long. We had power, but the power went away straight. Otherwise, if the market was really truly bullish at this point with this kind of candles, next candle would have pushed higher, but it didn't. It came down. We stopped out. We tried a couple of things a couple of times, and then we could not anticipate this move down. This move down we could not anticipate. Otherwise, this move down would have been very profitable. So you are just trying to build out a bias from nothing because there's no fucking bias available right now. So yeah, that's what scalping is. That's why I normally tell all the mentees, I always tell them, do not go down to 15-second time frame, because if you go down to 15-second time frame, you should have the experience in the market to play it, because it is very, very easy to blow your account in this small price action. Because you'll be like, your stops are here, you're entering over here, how much stop do you have? $30. You'll be like, okay, $60 I need to make. Let's say I'll take 4 contracts. By the time you reach here, you'll be totally wiped out. So you just need to be smart on how you're playing this market. All right, guys, any questions? Come on, let's go. No jokes yet, so questions is what it is. If you were winning, I would be making jokes. We are not winning, so no jokes. Sorry. Like right now, if I was like still trading, I will be thinking, okay, can I short here? And maybe, just maybe, use this candle as my stop loss. So I'll basically take a short, let's say at the close of this candle. If it closes bearish and below this, does a change in state of delivery on this candle, I'll take a short position, put my stops just above here, just above this candle. Or if you want to be a bit safer, above here. And you'll just target Q1 low. Again, same thing. So this will be the anticipation that I will be playing now. But again, 0.5 hour risk, or maybe even for full risk, this will be the kind of trade I'll be looking for. Why? We have gone back inside the OTE. We are getting rejected from the OTE. We have inversed the fair value gaps. So on top of that, from the 1 minute time frame, we basically have this massive back-to-back fair value gaps. Now the only thing that is left between us and this is this fair value gap. So some people will also wait for this to be inverted on the 1 minute and then enter. Some people will enter over here, but it's all about anticipation of how you see the market moving from one place to another, right? So if you will be like, okay, there is a fair value gap on this high. Once the price closes below this, let's say, right below this fair value gap on 15 seconds, I will enter this position. I'll put my stops just above this candle's high. You're just waiting for that. So you're anticipating where the market might want to go if it does something, but it's a quick anticipation. I hope it makes sense, like what I'm trying to say. Is it a good idea to trade only acceleration gaps? I guess not. Well, why not? You can trade it. It's totally up to how you build your entry model. So once you're like, now it has closed below, right? You can be like, okay, I'm going to take a trade. Instead of taking a trade over there, you can be like, okay, it's closed below. I'm going to take a trade. I'm going to put my stops just at the body of this candle, and I'm going to target London Q1 low. That's your scalping. That is, now it's up to you how much you want to risk. Do you want to risk $200 or $100 on this trade? So are you going in with the 1 contract, or you're going in with 5 contracts or 2 contracts or 3 contracts? That is your risk management, because this can be wrong, and this can be wrong in 15 seconds, right? But if this is right, this can be right in 15 seconds as well. So yeah, it's totally up to you how you trade it. But to coming to you, Gomez, it's up to you how you want to trade, man. The entry model, man or woman, I can't remember, but the entry model is your wish. You decide the entry model. Like in the mentorship, we study around 14 to 15 different entry models, right? In total. So different entry models, for like there are in total, I think 14 entry models, but it's up to you which one you want to use. Which one clicks with you more? Is it acceleration gap entry model, or is it some other entry model, order block entry model, or is it a BPR entry model, or is it some time-based entry model? It's totally up to you what you click with. And once you understand this is what I click with, then you start back testing that entry model to see what your win percentage is. And then you change and tweak that entry model to get to the best numbers that you can see. So it's totally up to you. Like if you were trading back-to-back fair value gaps today, right? Imagine the number of winners you would have had. Okay, just today, London session onwards. So London session, just back-to-back fair value gaps, right? So first one is over here, 200% achieved. Okay, second one basically came, I think, over here. Yep, there it is, 450% achieved. Okay, and then the third one came right over here, 250% achieved, and then on the other side, once you came, there is no back-to-back fair value gap yet. So you would have taken 3 trades, 1, 2, 3. There's no other 5-minute back-to-back fair value gap at any point. Every time back-to-back fair value gap formed, the market at least went to 250%. So it's up to you how you want to trade. Like, it's not just today. It's like whenever the market is rallying, you will get that sort. Like even on Friday, if I go, so Friday 1 a.m. is here, right? So let's see. So Friday 1 a.m. So I will start trading around this time, right? So no. There it is, the first one. Yep, there is the first one. So there it is. I think this is a fair value gap right over here. So the low high is 933.50, low is 933.75. Yeah, this is a fair value gap. So 450% achieved, right? This one, first one. Then you wait for the fair value gap to form. Okay, right over here. There you go. 200% achieved, and then 400% achieved as well, right at the bottom. Okay, like if you wanted to take another trade in the middle, you will be like back-to-back fair value gaps anywhere, friends, just over here at the close. I mean, this is what, Friday 9 a.m. in the morning. What, Friday 9 a.m. in the morning? What time was this? Oh yeah, okay. So again, even over here, it straight away achieved 200%. Okay, then you let it go. It's gone because it's achieved its first target. Then you have 930 open, back-to-back fair value gaps, 200% achieved. So, I mean, we have seen what, 7 trades, and all 7 trades on 5-minute time frame hit TP. So it's up to you, man, how you want to trade it. It's totally your call. But yeah, if you think this is enough, then I can assure you it's not. It's not enough. Nothing. I mean, it requires a lot more than just this. Anything, any questions, guys? Come on, guys, throw some questions. Otherwise, what's the use of us sitting here? Because I'm not trading anymore. I'm done with the losing. Today's day of losing is done. By the way, I might take a trade, just FYI. No, just kidding. I'm not trading anymore. I think I will take a trade, but I'll wait for London Q1 to be swept and then take a reversal trade to the upside if I get one. But yeah, I'll just wait for the market to do its thing. Any questions? Come on. No form, your question. I'm placing limit orders on stocks. Nice. Rich man. A rich man places limit orders. Poor man buy market because we don't have an option. No, it's good if you're placing limit orders. So not a very, I'll repeat again. It's not been a very good day for me. And it was coming, right? It had to come. I've had bloody beautiful week last week, around 17 hour overall. I knew streak ends, and mostly it ends in overconfidence. And today mostly it was overconfidence. It could happen, and that's part of the game. That's truly part of the game. The one thing that I've learned while trading for these years is that no matter how good you are, you will have those streaks where you will fuck up and you will be like, oh, why did I do this? No, looks nice for a long. Let's see. And you'll be like, why did I do this? Why did I trade like this? Why did I not trade like this? It's because you're human after all, and you will make mistakes. I have not seen a trader, and if there is a trader who says I don't make mistakes and I don't have losers, well, you're lying. You are a liar. You are lying from your face. If you have the guts, share your losers as you share your winners. Like, I lost today, that's fine during a stream, and when I win during a stream, I'll be happy as well. I'll make nice jokes. I'll not go into this psychology mode and make nice jokes, because this psychology is not just for you guys, it's for me as well. It's to remind myself sometimes that it's part of the game. It will happen. If you have got a payout on Friday, you will lose some money come Monday, because you're overconfident. You are thinking that you can never be wrong. It's fine. It's good to be wrong in those situations. And the best part is it's good to be wrong and you're small losers, right? You can recover them quickly. But yes, Any question, guys? Any questions from anyone? Otherwise, we can call it a day and we can meet tomorrow again. If somebody says thanks, then I think that they get bored because I'm here. No, honestly, I would not want to keep you guys if there is no question. If there is a question, feel free to ask and I'm happy to answer. Looks like none. Well, with that, I will call it a day. But thank you so much. And again, part of the game, losing is part of the game as winning is. And hopefully tomorrow we'll recover all the 1.6 hour that we lost, 1.4 hour, whatever, and be happy. Take care, guys, and enjoy your rest of the day. And I'll see you tomorrow. Nobody wants to say bye as well. Thank you, Ipo. Thank you for saying thanks. I love you. Thanks, Ilyara. Take care, guys. Bye bye. See ya.